Hello and welcome to Fortune and Freedom's Week in Review. I'm Kit Winder and I'm joined by John Butler, our investment director. And you guessed it, we're here to talk about the US election. And John, I believe you've got the inside scoop coming from the country yourself.
Well, I wouldn't call myself a Trump insider, although that said, I do know a handful of people who are members of his inner circle. And yes, I'm an American by birth. I left the United States several decades ago, but I do retain ties, family, friends, and some former colleagues, as well as some current colleagues as part of the Southbank and Agora Global Intelligence Network. And so I do feel like I have a certain degree of insight into why we have seen this surprising result and potentially also what it means.
Yeah, now we're going to get on to the nature of some pretty key UK-US relationships outside of your inner circle, but at the national level later on. But first, the immediate implications for the global economy, for trade between America and the rest of the world. China is obviously a significant. What are the key takeaways for global trade with America at the center of it?
Well, trade really is front and center here. Now, trade has been an important issue in U.S. politics off and on for just about forever. But it has been unusually prominent in this election, in large part because Trump has very, very openly threatened not only China, which you've just mentioned, but other countries, in fact, just about all countries. He's at least implicitly threatened with some sort of general tariff that he would impose because he believes that not necessarily every single country in the world, but a good majority of countries are following economic policies and trade policies that are in some way unfair. Now, you can disagree with that. You can quibble with that. You can say the U.S. is also doing things that are unfair. But this is what Trump has been saying. He is threatening a general global trade war on top of the trade disputes that have arisen between the U.S. and other countries in recent years. So that would be a major escalation. And that has a lot of people understandably worried.
Yeah, and as we mentioned, China is going to be a huge factor in this. And we've seen some of the initial moves of stocks being favored, maybe that are US domestic focused and maybe international ones that are more tied into the Chinese trade network have suffered in the last few days. Their relationship with Xi Jinping is going to be a critical one for Trump. How do you see the sort of personal relationship going there? Because that's such a key factor to how Trump thinks about international relations.
Oh, absolutely. I mean, look, we need to understand Trump is not a typical politician. And of course, some people that strikes fear into some people. But let's just look at this objectively for a moment. The fact is, Trump's a businessman. And what has made him a successful businessman is his uncanny ability to negotiate favorable terms. Even the deals he's been involved in that have not worked out, he's always negotiated contracts in a way that have limited his downside. And so you hear about how, multiple big developments that Trump's been involved in through the decades didn't work out. And those property partnerships had to declare bankruptcy. Trump, yes, would have suffered some losses, but he's always negotiated very effectively to limit those losses to an acceptable level so he can, live to invest again, live to develop again, live to fight again. He's good at that. And he's good at that, presumably also on the international stage. He knows how to negotiate. There's no guarantee he's going to get what he wants, but he is setting up trade policy with China and other U.S. trading partners. He is setting up for a negotiation. That's the way I understand his rhetoric. And I don't think I'm alone in that. So he is going to, at a minimum, threaten tariffs. He's going to get to the negotiating table. He will continue to use that threat of tariffs to try to get what he believes are reasonable terms. He will not simply walk away. He will keep pushing, keep pressing. He will engage in a form of what you might call international diplomatic price discovery. trying to figure out just how far China and others are willing to move, and moving the U.S. position as necessary accordingly to get some sort of deal. That's what I think Trump's about. Will that be a source of risk for financial markets? Absolutely. Negotiation can be risky. Brinksmanship can be very risky. Trump will go there. And so this will be a very, very big issue for the financial markets over the coming year.
That's a really interesting concept, sort of applying price discovery to the international trade scene. And one way in which price discovery will occur in financial markets is through the currency relationships. And Trump has a sort of a set of mixed desires and opinions on this, really, in that he really wants a weaker dollar for trade reasons. And yet, at least a lot of the financial community would look at his stated policies, his desire to spend, cut taxes, and see them as inflationary, which would lead to a stronger dollar. So where do you think the hammer's going to come down here? Is it on what he wants or what he will create?
You make an excellent point, right? Politicians can wish for a weaker currency to improve terms of trade. But then, as you say, if they go about spending money, running deficits, and if that encourages the central bank to tighten monetary policy, that's a recipe for a strong currency. And so Trump's going to have to be careful here. And it's not clear what sort of a relationship Trump is going to have with the Federal Reserve during his second term. So, watch this space. The initial reaction we've seen in the financial markets has been a stronger dollar. The dollar is up versus most currencies. It's also up versus gold. And so other factors equal, that does not improve the U.S.'s terms of trade. So ultimately, what I would like to see happen will be for Trump not to try and use the dollar itself one way or another as an instrument of policy, rather leave that to the financial markets and focus on whatever you can do simply to make the U.S. more competitive, make it a more attractive place to do business. Those are the things that fundamentally will improve the U.S.'s terms of trade with the rest of the world, whereas trying to manipulate the financial markets or to try and use whatever policy levers you have in that sort of way to artificially do this, that, or the other thing. No, I would prefer for him to focus on the fundamentals and let the dollar and the foreign exchange markets generally and the financial markets generally respond as they will do, hopefully, to a sensible fundamental set of policies.
Speaking of financial markets, John, and moving on slightly, one of the immediate conclusions was American stocks ripped higher on the day, and the general consensus and a bit of the vibe seems to be Donald Trump equals 4-year bull market for US stocks. Is it as simple as that?
No, it's not anywhere near as simple as that. Now, what I've done is I've actually gone back following these results, and I've looked very, very closely at how the stock market responded in 2016 when it became clear that Trump had won a clear victory. There was an initial knee-jerk sell-off because people were so surprised by it, and there was just a general quick de-risking. But in fact, very, very quickly, the stock market came roaring back, and then it rallied in the days following Trump's victory. And it did so even though Trump did not emerge in 2016 with as clear a mandate as he has emerged with this time around. He's won the Electoral College decisively. He's even won the popular vote. He's done so with historically high voter turnout, and he's carried the Congress on his coattails. That's historic. I mean, that's big. And so, yes, we're seeing a big rally in the stock market, which in certain respects is a reflection of what we also saw in 2016. But here's the big difference. This stock market rally on Trump's victory is occurring with the stock market at a historically much more expensive valuation than it was at in 2016. And I'm not only talking in price terms. So the Dow, to use a benchmark index, was in the high teens when Trump won in 2016. It's in the 40s today. Okay, that's in price terms. But a lot of that is valuations being more expensive. Some of it's inflation, Some of it's just the fact that corporate earnings have grown with inflation and will continue to grow with inflation. But a lot of it is down to valuation. But here again, when you look at valuation, that increase in valuation over the past 8 years is overwhelmingly 80% plus concentrated in the so-called Magnificent Seven stocks. That's where you see it. Strip those out. And actually, stock market valuations today are comparable to where they were when Trump won last time round. So that's what's really changed. If you're looking for a before and an after, that's what's really changed. Now, ask the question, is that justified? What about this election result justifies that historically really elevated market valuation concentrated in 7 companies? I personally do not believe it is justified. Trump may do sensible things in economic policy. I certainly hope that's the case. The Federal Reserve may follow a sensible monetary policy during this term. I hope that's the case. But the reality is debt, public and private, debt servicing costs, public and private, the tax burden, federal, state, and local, all of these things are an order of magnitude larger today than they were at the start of Trump's first term in office. And they are not easy problems to solve. Deleveraging an economy is not an easy thing to do. The outlook, in my opinion, the outlook for stock market valuations in the US and by implication elsewhere in the world is that they're not going to be able to retain these lofty heights, even if Trump follows a sensible set of economic policies.
John, you mentioned during that the extent and the magnitude and the historic nature of Trump's win here, the popular vote, the Electoral College and Congress. You were published ahead of time expecting that, which I think is remarkable and we should highlight. So well done you. But certainly one group of people who are feeling a bit more sore-headed about what they saw coming is the UK Labour Party, and David Lammy, our Foreign Secretary in particular, is probably ruining some of his previous comments and working hard to restore relationships with America and with Trump in particular. That relationship is crucial, obviously, historically for us as a nation. Trump has family history here. He has golf courses here. He has a love for the royal family. He has a love for a lot of parts of British culture. How do you see that relationship developing, and how at risk is it because of the rhetoric that came out of the Labour Party over the last few months?
I mean, certainly if you reside on this small island, as you and I both do, I mean, that is an absolutely critical question to think about, right? That is the so-called special relationship between the United States and the United Kingdom, which has been in place now for about a century. I mean, it depends on how you choose to date it. Personally, I date it from the Washington Naval Conference of the 1920s, when the U.S. and the U.K. ganged up on the Japanese and the Germans to limit their ability to grow their fleets. Basically, that's the beginning of real Anglo-American dominance in the world. The beginning of the special relationship can be dated from there, but whatever. I mean, that historians can quibble about that sort of thing. Where are we today? Today, we have a situation where the UK has, as we know, a Labour government, one that is headed by multiple, you've mentioned a name, but there are multiple names who are frontbenchers in this government who have said some rather disparaging things about Trump in recent years. And of course, Trump's aware of that. And so the question then becomes, I mean, is he going to shrug that off? I think he probably will. After all, as I said earlier, he's a businessman. He's a negotiator. He will want to get business done. And as you've mentioned, he's a huge fan of the UK. He believes the UK has had a benign influence in the world, both historically, and continues to have a benign cultural influence today. Does the current government get in the way of that impression, that favorable impression that Trump has of the UK and the special relationship with the United States? Absolutely not. He is not going to let the set of people currently occupying the front bench in Parliament to get in the way of that. He will find a way. He will find a way to do business. He will find a way to still rely on the UK as a partner abroad when it comes to trade policy. The US and the UK have quite similar economies. They're both large net importers from the rest of the world. They both rely on foreign funding of their trade deficits. It is important that the US and the UK close ranks on trade policy, and they will find themselves useful allies. Labour should think twice if they instead decide to cozy right back up to the EU and shrug off any advances that Trump makes in this regard. I think that would be a colossal error. And keep in mind, we're also seeing political shockwaves across the North Sea in Germany. The German coalition government has collapsed. They're going to have to call a snap election. One wonders what way that's going to go. But if you look at polls, it's very possible Germany is going to have a conservative center-right government from next year. Does the UK really want to be left-leaning in the middle of that? I think that would be a very bad idea. So anyway, watch this space, but I'm optimistic that the special relationship will only continue under Trump and the Labour government. They will find a way to do business together.
Well, that is reassuring. And staying with our focus on the UK at the moment, John, as investment director here at Southbank, you run a strategy focused on the UK markets and focused around the specific sectors that perform at different times. And I was wondering, the initial reaction to the Trump election was sort of to some tobacco stocks, some oil and gas, some defence stocks, obviously in the UK and Europe, jumped on his performance, on his election win, I should say. But looking maybe further forward, what do you see as the sort of big sector winners or losers over the next year or over his term, or what are the big impacts there without giving too many specific forecasts?
Well, look, as I mentioned a few moments ago, the stock market appears pricey here in valuation terms, but that really is down to the Magnificent Seven, which is the tech sector. If you strip that out, other more traditional sectors do not necessarily look particularly expensive. In the US or in the UK here, you actually see valuations are even more generous in the UK. That is relatively attractive in valuation terms. You can get into industrial companies, you can get into consumer staples companies, you can get into healthcare, you can get into other sectors which are somewhat more defensive and less growth oriented than tech, but you can do so in the UK at historically reasonable valuations. So if you are worried, as I am, about excessive debts, excessive leverage, just excessively optimistic growth assumptions generally being priced into stock markets, the UK actually represents a relatively safe haven. There's a lot here that investors can buy that does not cause concern in the event that the global economy, struggles a little bit as it works off some of this debt and leverage, which needs to happen. And there are some indications that global economic growth slowed a lot over the past year. Look at China, look at the US. Trump can't just wave a magic wand and reverse those macroeconomic trends. If the global economy has slowed down, it has slowed down, and there's no quick miracle cure to that. So to the extent you do want to be invested in the stock market, and indeed I do recommend being invested, we're living in an inflationary environment after all. You've got to at least keep up. If you do want to be invested, the UK has a lot to offer in terms of relatively attractive valuations and some quite defensive companies that should be able to grow earnings, if only modestly, in almost any global macroeconomic environment.
Interesting. And one other asset I'd just love to briefly touch on is gold. I mean, some of the initial reactions to the election were, a stronger dollar, as we've mentioned, and then also a bit of a peace trade, you could say, with sort of some companies linked to Ukraine soaring on this idea that Trump will broker a peace deal of some kind, however beneficial to Ukraine that is, remains to be seen. But a strong dollar and peace in the world, what does that mean for the key drivers of the gold price?
I think it's understandable that gold sold off on this. But step back from the chart and what do you see? You see that gold had a phenomenal run over the past year. And even if you look at, this knee-jerk reaction to Trump's win, which is, strongly risk on, right? Look at the stock market. Well, risk on is generally an anti-gold trade. And so you saw gold being the mirror image of that, as it were. So that's understandable. That makes sense to me. But as I was saying earlier about look where the stock market is, look at this valuation. Look where gold is. I mean, gold is still at a level where it's telling you what I've been telling you just here and now. We've got this excessive debt and leverage problem. It needs to be worked off. There's a huge tendency on the part of central bankers and other economic officials to try and, at least around the margins, inflate your way out of some of that. Even Trump speaks in a way which suggests he kind of gets it, that inflation's probably going to be part of the solution, if you want to call it that. So the idea that gold's going to get into a bear market here, I think is misplaced. I think that the state of the world practically guarantees that gold is going to keep moving higher. Now, that does not mean it will move as high, as fast as it has over the past year. That was a hell of a move. But I do not see gold getting into a prolonged bear market downtrend, given the current state of the world in general, in the US specifically, but by extension elsewhere.
Well, given your long expertise in the sector, John, it's always good to get your views on that topic. So thank you for that. One final question then, before we leave viewers, if I may, and that is that we've seen inflation surge up to 8, 9, 10% in the UK, US, and more globally, and we've seen it come all the way back down. If you go back to the 1970s, what we saw then was waves of inflation. It wasn't one huge surge that came back down, it went up, and then it came back to reasonable levels. Is there a danger that we're taking inflation risk for granted, that we think it's over, and that you saw with Trump and Harris, both were very willing to spend, both were endorsing bigger deficits? There's obviously controversy around Trump's relationship with the Fed as well, that he wants gentler monetary policy to go with his more aggressive fiscal policy. Are we underestimating the possibility for another, maybe even a bigger wave of inflation in the next 5 or 10 years?
I think we probably are. And this is not a view on Trump per se. This is really just a structural view. You mentioned the 1970s. The US economy / global economy went into the 1970s with debt burdens that were far more manageable than what we have today. The portion of public revenue spent on government debt service was far lower in most countries, not all, than it is today. And the private sector is carrying much more debt today than it was in the 1970s. And so to the extent that a certain amount of inflation in multiple waves had to roll through in the 70s to help reset things a bit for healthier growth in the 80s and 90s, we really haven't seen it yet. We've seen one big wave, but that's it. And that has not materially reduced debt service in most countries. It's helped out in a few places, but in many others, it has yet to have a material impact. And so I do believe there are more waves of inflation coming through. They may not all be as large as the one that we just went through, but they will be large enough to have a material impact on financial markets and, of course, household finances. And so it is important as an investor to keep in mind that as you go about constructing your portfolio and making your sector and company stock picks, that you look for those places where there is robust pricing power, where profit margins are likely to remain stable or perhaps even to grow. That's where you want to be. So it is not by any means the all clear for stock market valuations or financial markets generally, just because Trump has won and carried the Congress. It's way more complicated than that. And the historical legacy burdens that the US and other countries are carrying are extremely large. And one guy is not going to be able to turn that around. So, anyway, watch this space. But as investors, we've got to be sober. We have to think very soberly and clearly about the challenging state of the world.
Okay, thanks, John. Well, we're going to leave the investment implications there. But before we go, I mean, John, in your Sunday brunch, you often turn to Conspiracy Corner. Now, the Trump campaign spent a lot of time suggesting that the election result would be in question if they lost, and they've obviously questioned the 2020 result a lot. If you campaign on the basis that the you can only win this election if it's stolen. If you then win, does that raise any questions to you?
Well, of course, and I'm sure there are some people who are going to look into this. But what's interesting is that there was something more preemptive this time about the way in which all eyes were already on this election on both sides. That is, both the Republicans and the Democrats were absolutely looking over each other's shoulder going into this. So if there were any potential planned shenanigans, chances were much, much higher this time round that they would be spotted by somebody, they would be reported on. And so this election, this was way more light this time round, way more light being cast on this election. Does that guarantee that it was fairer? No, not at all. It doesn't guarantee anything, but there was a hell of a lot more light on this election, which, to be fair, has only just concluded. And so there may well be some investigations that are going to take place, and who knows what they might find. Given the scale of the victory, I think it's highly unlikely that they could possibly tip things back. But I would fully welcome scrutiny. I mean, democracy dies in darkness, and certainly an election that takes place in darkness is not one that the public is going to trust. So I kind of welcome the fact that there was a hell of a lot of scrutiny this time around.
Well, John, it's always great to speak to you, and I'm sure viewers have been really grateful to get your thoughts on the election. Thank you so much for joining us. This has been Fortune and Freedom's Week in Review. See you again for next time.